Okay, welcome back. We've got the market, which is down, 30 points or so. On the index, 18,381 is where we are at. Now, Star Health is on our radar after second quarter earnings. Gross written premium is up 11%. Net earned premium has seen a 16% rise versus last year, both in line with estimates, but the claim ratio is slightly elevated. Further, the higher combined ratio has also led to an underwriting loss this time around. Anand Roy is Managing Director at Star Health and Allied Insurance. He's joining us to take some questions. Anand, great to have you with us here. Good morning. Appreciate your time. If you look at monthly premium numbers, Anand, over the last 5 to 6 months, you've been growing at about half the industry average. Could you tell us what's been happening? What is the reason? And how do you see things going forward?
Morning, Prashant. Thanks for having me. As I've said earlier during our interactions, the company's focus is on retail business, and we are growing at almost 50% higher than the industry as far as our retail business is concerned, which is the main focus area of Star Health. We have taken some strategic calls to reduce our group exposure, that is a corporate business exposure, and as a result of which the headline growth is a little muted this year. But that's part of a strategy that's happening by design. And we expect that from next financial onwards, that will even out.
Okay, so from a shareholder perspective, can you explain it to us? Now that you have sort of shifting your business more towards individual health products, what would the mix be over the next 1 year or so? And what would the impact be on growth?
So this year, the growth will be, we are estimating around 18 to 20% growth on an overall basis, 18% growth around top line numbers, but we expect to grow 20 to 25% on the retail side. That's our estimate. But from the next year, we have traditionally been growing much faster than the industry always, and we expect that to continue. We hope that, from next year onwards, on an overall basis, we should be, registering 20% plus growths.
Okay, all right. Anand, what about, this growth? How much of it will be price-led?
So the price hikes and the price increase due to age revision, age increases within the policy, I think that contributes around 8 to 10% of our premium growth. And the balance comes from, new business and new initiatives.
So as this transition happens and there is a higher share of individual health products, naturally, I assume your margins would also increase. How much would they increase to?
Yeah, absolutely. And if you look at our performance for the last 2 quarters, we have been profitable both in Q1 and Q2. Q2, a little bit muted on the underwriting profits because, it was a season of monsoons and we saw a huge inflow of monsoon related claims. But then, health insurance is a seasonal business. We don't really, we cannot measure it quarter to quarter. On an annual basis, this year, we expect that our, combined ratios will play out around 93 to 95%. And we will make substantial underwriting profits as well as we will be able to deliver all the projections that we have highlighted during our calls.
Anand, sorry, by when you said? Substantial underwriting profits?
So, Prashant, as we speak, even if you look at H1, the company has a net profit of more than 300 crores has registered. It's only the Q2, the underwriting profits were muted, but the company registered a net profit of close to 100 crores even in Q2. So we are profitable, back to the profitable ways of doing business. And as we end the year, our combined ratio should be around 93 to 95%.
93 to 95% combined ratio for the full year. Okay, fair enough. Could you tell us what have you been picking up? What we've been picking up from sources is that the expenses of management ratio would be set at about, standalone health insurance companies would be set at about 35%, which will go down 0.5% every year. I think you and I, we've discussed this before. Would this be a doable target according to you? And is it workable? Or do you think this needs more deliberation?
No, I think it has been deliberated enough. And I think this is the final outcome of all the deliberations. And we believe that this is definitely workable. insurance companies have to operate within, set margins so that, the policyholders get the maximum benefit. As I can speak for Star Health, our operating expenses are already lesser than 30%. So we are operating in a very lean and mean fashion, and we expect that 35% is a fair enough margin for any company to operate.
You spoke about a 20% growth going forward in the next year, but I was just looking at the data for, say, the past 6 to 8 quarters. You were growing at a faster rate than the industry during COVID, but post-COVID, that has slowed down a bit. The industry is growing at almost, 25-30% as of the April data that we have. Any reason for that?
Yes, Sonia, so that growth is largely led by the group business.
Okay.
We are more focused on the retail side. We are a B2C player. So on the B2C side, we are growing at 50% faster than the industry. Even today, with a very large base, you have to understand that Star Health is the largest player in the retail segment. We have 34% market share. We have, in fact, increased our market share by 2 percentage points this quarter. So I think that's our focus area, and we'll continue to be there.
Okay. All right. We will leave it at that. Thanks a lot for joining in. All the best. So that is Star Health Insurance talking about their retail business seeing a 20 to 25% growth, and an overall 18% growth is what they're looking at on the top line. But the numbers were below estimates, and that's why the stock is under pressure at the moment. Plenty of stocks that are moving around. All your platform companies are getting hit very hard this morning, whether it's Paytm, PB Fintech, Nykaa, all under pressure. And then you have companies like Ashok Leyland, Tata Motors that are also under pressure at the moment. The market is not that bad. It's just the mid-cap end of trade which is sulking quite a bit, and large volumes on stocks that are losing ground. So there is high conviction and high selling pressure. Mitesh Thakkar is with us, so let's get a quick call at 9:45 from his end. By the way, a lot of these stocks, not just Star Health, but something like an India Mart is under pressure. KEC International posts the management commentary, which is not bad. So maybe profit taking is the order of the day. Mitesh, a quick comment on not just the headline index, but what would you do with some of these platform companies? You don't have enough of history to, kind of tell us for the long term, but slightly medium term, Paytm, Nykaa, PB Fintech, what's the call?
Sonia, I think the only thing which was appealing to me, and I hadn't still bought it as yet, was Nykaa. I think, with that reversal, which was the big candle which happened post that strong buying from the institutional side. But that candle is entirely reversed. So I think the other ones are clearly weak. I mean, Paytm, for example, I think, is definitely looking weak from here. And I would not be surprised to see the stock get below the lows of 500 as well, and possibly get towards 450, 440 level. So even Nykaa, I think the bullish setup is now evaporating. So I think avoid them very clearly for the time being until we see some kind of reversal happening at lower levels. And then I think, we'll take a call from there. But as of now, it doesn't look like that the trend is on the upside. So stay away.
Okay, trend is not on the upside. Stay away with most of these names. I mean, even Star Health, the company that we were talking to, I think it went down to about 500 kind of levels back in, July actually. From there, it went up all the way to about 800. From 800, it's back at about 600. So it's not the new age company. It's a traditional old brick and mortar health insurer. But the fact is, fairly recent listing in that sense. That is also off quite a bit. Broader markets, as Sonia pointed out, I think is where bulk of the pressure is. And in that sense, we put out this call in the morning from Sanjay Mukim of JP Morgan. It was interesting. I mean, the last line is what you should pay attention to. He said, our analysis of company quarterly disclosure suggests that individual investors were net sellers of equities in September, even as FPIs have turned buyers. There is risk to flows if reports of changes to capital gains come true. But that's in the future. And this is the line. He adds lower liquidity is a greater risk to mid-caps, and that investors should look to reduce allocations to smaller Indian stocks. That is what their kind of analysis shows. Sonia.
I just want to point out these platform companies, right? They're getting thrashed at the moment. PB Fintech is at a new low this morning, and that's Policy Bazaar at 359. If you remember, the IPO price of PB Fintech was around 980, and from there the stock is absolutely thrashed right now. 980 was the IPO price. It's at 359. So it's been a horrific time for these companies, the platform companies, that is Nykaa as well, getting thrashed this morning. But let's talk about better things, and that's travel, right? It is wanderlust now for all of us here in the studio as travel is picking up post the pandemic. The industry has seen occupancy levels rise across the board. Revenue per available room has also seen a 7% increase versus the pre-COVID levels. To understand the outlook and what the festive season demand is looking like, we're joined by Patanjali Keswani, the Chairman and Managing Director at Lemon Tree Hotels, and Devendra Parulekar, who's the founder at Saffron Stays, joining us as well. Gentlemen, morning to both of you. Mr. Keswani, I want to start with you. First, before we talk about your own numbers, which you recently reported, there are a slew of weddings now taking place across the country. This is by far the biggest wedding season we've seen, at least in the last 2 to 3 years. Corporate demand has come back in a big way. Going forward, what kind of occupancy levels do you see? And are there outsized gains that the hotel industry is looking at?
Good morning, Sonia. Now, you see, the wedding season and weddings themselves do not necessarily add a lot of, occupancy or room demand to hotels in big cities. They typically add value to destinations. So, for example, I was in Udaipur yesterday. I have a hotel there, and there I was told that we have 7 or 8 wedding bookings, which have a big impact for that hotel, because these bookings typically they buy the whole hotel out. So wedding season, good for certain types of hotels and good for banquets and banquet income for even city hotels. But it will not materially move the needle. In fact, the festive season, I see everybody reports that it's a time for increasing occupancies. That's not true. Actually, it's quite the reverse. During festive season, it is the occupancies of specific destinations that go up, but mostly business hotels and many leisure destinations, the occupancies take a big hit because people do not travel necessarily during Diwali and Dussehra. But November and December is looking fantastic from every perspective, whether it's the wedding season you talked about or general business demand. So I definitely see in H2, we will exceed what H2 was in the last normal year pre-COVID, which was, I think, the occupancy was about 70%, 71%. I think it'll cross that. So that's the good news. And prices, of course, are at least 20% up over pre-COVID. So overall, you refer to RevPAR. I think RevPAR should be 20% over pre-COVID. And prices, costs will be down for all large listed players. So overall, EBITDA should be much, much, much better in H2 this year.
Okay, all right. Hi, Mr. Keswani. I wanted your response to this fact that homestays suddenly are becoming very, very popular. Do you think there is enough for everyone to enjoy? That's you guys, the hotels, the homestays as well. Or will it come to a point where the homestays start eating into your share?
Well, I do think homestays have affected us in specific markets like Goa. But on an aggregate basis across, we are in 52 cities. They have not really materially moved the needle. But Goa, I can definitely see the impact, not only for us, but for hotels in general, that many people are preferring to go to homestays.
In fact, we have Devendra Parulekar, who is the founder of Saffron Stays, and Saffron Stays has a network of over 250 plus homes. Devendra, good morning and thanks for joining us. Your view on, the comment that my colleague was making about how the possibility of homestays eating into the market share of hoteliers, is there any fact to corroborate that? And how do you see demand shaping up as we head into, the end of the year? There's also the wedding season.
Morning, Sonia. Morning, Patu. Firstly, I think this is a misnomer that the homestays are eating into the hotel industry's market. I think there is enough and more space for everybody. The demand and the structural changes that have happened in the demand are so positive for the entire industry, and the buoyancy of that demand is so so heartwarming that I don't think any of the segments should be worried. I think even the same individual would book a hotel when he or she is booking for himself or his own family, immediate family. But the pattern of the demand changes when it's a large group or when it's a family of 6 or 7 or friends of 10 friends are going together. Then they tend to book a villa because their requirement for privacy goes up. But again, when the group size increases beyond 20, it's back to the hotels, because the kind of infrastructure, the kind of size that is required to cater to a large group, only a hotel can do it. So there is a sweet spot of anywhere between 6 to 16 members in which villas and homestays really rule. But beyond that, I think below and after that, it's hotels which kind of rule the roost. So honestly, there is no competition. I think it's coexistence. I think large mainstream hospitality industry has also realized that they need to complete that part of the portfolio, and hence are building out their arms in homestays and villa rentals. Having said that, back to the point of demand, I think we've not seen a fantastic November. And we were surprised by that. Post Diwali, we actually saw a small dip. But the month of December has been a surprising packet. Unlike every year where decisions have been taken closer to the New Year's Eve or the Christmas Eve, where bookings actually picked up in the second and the third week of December, this year, for the first time, I'm seeing bookings for December having been done in October, November itself. Right, so a lot of advanced booking, and one of the reasons is very, very high flight tickets. If you notice, if you try and book something for anywhere to fly anywhere, tickets are really, really sky high, and that's actually prompted people to do a lot of advanced bookings. So a lot of our super premium, luxury, ultra lux homes are booked out, from the Christmas Eve right down to the first week of Jan. And there's barely any inventory left. And now our focus is to fill up the rest of the month of December.
Sure.
Good morning, guys. Devin was, I can tell you, was partying till late night yesterday. Devin, amazing, you're back chirpy in the morning. Full disclosure, Devin is a neighbor, and he's also an avid tennis player and tennis partner as well.
Were you at the same party?
We've not caught up on the court for a long time. But
were you at the
no,
same
I was
party?
not. But I know.
Devin, keep us informed. Sometimes Prashant doesn't turn up.
So both of you have turned up this morning, not bad.
No, but Devin, when is the IPO coming? Now let me ask you that on TV.
You're embarrassing me. My investors are asking me the same question, so I think it's IPO is just a journey, right? I mean, it's not the destination. I think the larger the dream and the legacy that we want to build out is, I think, to change the way Indians as groups travel within the country. There aren't too many options available for a family of 4, family of 8, family of 10 beyond hotels pan India. There are scattered stays. But I think, the consistency and the standardization of experience and quality and the certainty that hotels give, the comfort, the luxury quotient that hotels give, I think that's something that we're trying to solve structurally in the homestays and the vacation rental space.
Devin, also, I mean, you were talking about how November is not shaped up as well as perhaps what you expected. Is it not just because of flight prices which are escalating, but also because there's a lot of competition now? There's Stay Vista, Airbnb, of course, Taj has their AMA stays. So this space is getting very cluttered.
Oh, not at all. In fact, if I say this very clearly, I think there's a gross undersupply in this space right now. I don't think it's competition. It's clearly a small structural dip because groups tend to decide in a very different manner. Unlike individuals who pick up, take the car and just drive out. The decisions are literally last minute, and hence occupancy even fills up towards the end of the week. For groupthink, people have to align their holidays. People have to ensure that they take their decisions a little in advance. And hence, when you have a Diwali coming in the last week of October, and when you have a super holiday season happening in December, November would see a dip. And this is normal. We see this. Last year, Diwali was in November, hence November was good. And I'm just doing a month-on-month comparison, and hence, and founders are never happy with the numbers, right? So, yeah, we're forever wanting a 5 to 7% increase month-on-month. And that's just gone into our DNA. If it doesn't happen, then we complain.
Founders are not happy, investors are not happy, shareholders are not happy. The list is endless, right? But Mr. Keswani...
as long as the guest is happy, right? So, Sonia, as long as somebody's problem is solving, and as long as the homeowner is happy that his asset which was lying idle is actually being monetized. I think the journey is just a beautiful journey for us.
Okay, but I want some numbers, right? Mr. Keswani, you mentioned that the growth will be quite good this year. Would you change your outlook for FY23 in any way? Because the revenues are expected to be more than double perhaps compared to what you did last year. Both for FY23 and FY24, where do you see the business?
You're talking about the hotel industry or Lemon Tree?
You can give me both. First, of course, for Lemon Tree, but for the hotel industry as well, your view?
Well, I think that, H2 will be very good. I've said it publicly, we'll cross, in the owned portfolio, we'll cross 800 crores, of which at least 400 crores will be our EBITDA, net EBITDA. But in our managed portfolio, we should do another 500-600 crores. And we get about 7% of that. So we should do fee income of about 35 crores. So that's roughly the numbers I would look at. Next year, I think will be much, much better because finally corporate demand will be fully up to pre-COVID levels. So next year, I would reckon it should be at least 15% better in terms of revenue. And therefore, 30% better in terms of EBITDA.
All right. Mr. Keswani, what about the debt number? Where is that one headed?
Our debt is not significant in the sense that with 6,000 owned rooms now, having 1,800 crores of debt is basically 30 lakhs a key, which is like 25% of your asset value. So it's absolutely not an issue. In fact, you keep asking me about debt, which I find amusing, but nobody else does. So
we're here for the shareholders, sir. We need to ask you the questions. We ask you on your revenues.
I'm saying the shareholders never ask me.
Maybe they put that question to us as well. So, good to see that business is shaping up. You're confident about FY23, Mr. Keswani, and you're very optimistic about FY24. And we'll keep bringing the questions in. And we're glad that you're taking most of them head on.
So there's one more, piece of the system that's unhappy, the anchors, right? The shareholders, the investors, the promoters want more, and now the anchors want more as well.
Anchors want lower room rates and lower homestay rates, so they can party.
Even consumers want lower homestay rates, I can assure you that. Devendra, you were saying something?
Yeah, no, I mean, the anchors are more than welcome. They're all friends, right? So welcome, come and stay with us.
And Devendra, we're waiting for you to list. Then it's game on, I think so. The journey gets a little bit more tricky, maybe. But thanks, gentlemen, for joining in and giving us your quick take. It's been good speaking to you all. Well, as we had that conversation, keep an eye out on the Nifty. We were talking about this buy on dips theme. Well, that's precisely what's happened. The Nifty has moved into the green after starting off with a cut of around 60-65 points. Slip into a short break on the other side. Manisha Gupta is waiting for us. She'll tell us about the commodity space, and we'll get Mitesh back in as well to give us a quick call on the index.
Okay, well, we are back to reality. All that talk about traveling and hotels, but now we're here back in the office tracking the markets. Nifty is absolutely quiet, down about 20 odd points. But let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is here to give us the latest on that. Manisha, what are you tracking?
Sonia, I'm looking at the battery metals, and they have started to do well in last week or 10 days. The month of November has started good for them, and that usually happens as we start the winter season there in any case. So the lead prices have been doing well. We have seen 6.5% of gains come in for this week itself. If you look at the Shanghai markets, the prices there have inched up to nearly 6-month highs. We did see some smelter shutdowns for lead and zinc in Europe, and that has been impacting the inventories and production as well. So when you look at the LME inventories for lead, they are the lowest in last 15 years, thus supporting the prices. So 6.5% of gains coming in for lead for this week itself. The other metal that has been in the news all of this year has been nickel. But here as well, there has been a big price movement in this week itself. We have the prices 22% up on a week-on-week basis. It is trading at a 6-month highs. And we have seen a jump up of nearly 40% in prices in the last 2 weeks itself. The liquidity clearly has been a bit of a concern. And remember, since the month of March, when nickel prices hit that $1 lakh per ton, we have that 15% 15% of cap in prices also. You can't see prices go up or down more than 15%. The support also comes in from the fact that the mine in New Caledonia says that they are cutting fourth quarter production. They are looking at weaker demand. The prices are not sustainable, nor is the profit or margin, and is the reason they have this report coming into the markets there. Also, the decline in dollar index, which is just about holding 106 even in the trade today, has been supportive. The low liquidity leads to exaggerated moves coming in for nickel. But the point being that we are holding at $30,000 per ton. The markets believe that the fair price is $25,000, so that $5,000 of a movement is what the street is expecting.
All right, Manisha, thank you very much for that. Nickel in focus there. Commodities as well. Now, let's get back to stocks. And Paytm is in focus. The stocks are 9%. That block has gotten done. And what next, I guess, is the question. We'll find out. But let's just revisit what has happened so far this morning. Vivek, over to you.
Well, that's right. So as we had indicated earlier in the morning, that there was a large block deal likely to happen in Paytm today. That particular block has happened in the window, and almost 3.19 crore shares actually exchanged hands. Now, the average price was slightly above the lower price band. The lower price band was 555 per share. The price band is actually around 561, at which this particular block deal has occurred. So we understand that SoftBank, was the likely seller in this particular block deal. For Securities was the broker to the deal. Remember, SoftBank held around 17.45% stake. After this particular block deal, they'll continue to hold in excess of 12% stake in the company. They've mopped up close to 1,300 crores in this particular block deal. Now, what is interesting is that we understand that there is now a 60-day lockup period as far as further stake sale of shares by SoftBank is concerned. So at least for the next 60 days, it doesn't appear as though there will be further supply from SoftBank. So Paytm, on the back of this large block deal, is down quite significantly in the session today.
Okay, all right, Vivek, thanks a lot for that. Let's focus on a stock that's doing well. Shriram Transport, that one's flying away. Abhishek joins us to give us a quick update. Abhishek?
Well, Nigel, NCLT approval has come for the scheme of arrangement as well as amalgamation between Shriram Group companies. So this has come as on 14th November, they got an approval from NCLT. So company has fixed 30th November as the record date to determine how many shares of Shriram Transport Finance will be given to the shareholders of Shriram City Union Finance as well as Shriram Capital. As per the merger terms and conditions, it's already known that, for every 100 shares that you have in Shriram City Union Finance, you will be given about 155 shares of Shriram Transport Finance. Back to you.
Okay, thanks a lot for that. But in case you missed out on the last 1 hour, the big move really has happened in a small stock called R Systems. Blackstone made an open offer for 48.3% stake in R Systems at 246 per share. We caught up with Satinder Singh Rekhi, the CEO of the company, to understand the rationale behind this stake sale. He said it was about time they needed to get in a big player into the company, and the street likes that. Take a look.
The rationale is that we have reached a point and we need a big partner who can take care of the company and take us to the next level of its growth and take care of its employees, customers, and partners. Blackstone is a great partner. They are very good, employee-friendly with their other portfolio companies, and that's why we wanted to partner with them. And the promoters will be involved. How it unfolds, we will know as we go along. I will certainly be a strategic advisor to them, and as we go along, the role will develop a little more. Blackstone has a lot of expertise, so that has to be utilized into the company. It's always a dilemma, whether you do it when the wave is going up or other times. But looking at it inside, I think we needed a stronger partner because we are going to get into larger customer bases, so that required a heavyweight along with us.
All right. That's basically our systems management speaking with us earlier. Suvain Life has got a positive. Ekta is joining us to tell us more. Ekta, hi, morning.
Morning. Well, yes, definitely positive news, which is really coming for Suvain Life because they have announced the randomization of a first patient in the phase 3 global clinical trial of SUVN 502. Now, SUVN 502 is basically being studied for the treatment of agitation in patients with dementia in Alzheimer's. Now, remember that SUVN 502 was a particular molecule which did failed clinical trials when it came to another indication in Alzheimer's, and hence the company reverted and started looking at it for dementia. So the street would be hopeful that maybe this particular molecule would see some kind of positive response in this phase 3 clinical trial. The trial is multi-center, randomized, double-blind, placebo-controlled across 50 sites in North America and Europe, and the study will enroll around 375 patients. The top-line data, however, is expected to be available by early 2025. So it's not something that we can expect in the near term. But again, once the molecule starts seeing some amount of traction, then there is always hope of an in-licensing or deal or a strategic partner coming through, and hence maybe the street likes the potential of this particular molecule.
Okay, Ekta, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Chetan Iyer of Morgan Stanley to assess the outlook for the Asian markets.